Hello, Harry Bing here, your radio realtor and your down payment assistance specialist. Just got off the phone with a buyer asking some pretty traditional questions like what type of mortgages are there? And so I figured I'd repeat that just so we can continue our community service and educating all of Central Florida. Well, you have the FHA, the VA, the conventional, and the USDA. Well, so let's start with the USDA. The USDA is a rural loan program for places like Lake County in certain areas of Volusia. There are a few areas in Seminole. Polk County has quite a few areas. There are very few areas that qualify for a USDA loan that are located here in Orange County. A few years ago, there might have been a couple of USDA slots around Ocoee, Winter Garden, Oakland, maybe Taft, Buffalo, but now they practically all gone. A few still out there. Now, the USDA is 100% financing. In other words, you don't make a down payment with USDA. You just have to be concerned about your closing costs, okay? Which is part of that 7% number that it takes to buy a house. Always takes about 7 to 8% of the purchase price to buy a house. Let's talk about the second type. Let's talk about the FHA. Now, this is probably the most popular loan for first-time home buyers. It's FHA, Federal Housing Authority. It's a government-insured loan that's bound together and resold on the secondary market. Okay, it generally can go down to a lower credit score. Some lenders go as low as 580. The lower your score, the more money you're going to need. You aren't going to get any assistance at that low point. But FHA only requires 3.5% down. That's the beautiful part. Okay, and it's insured. So it's a good loan to start out with. Let's talk about the VA loan, the good loan for veterans. Go USA, okay? Now, you've earned that. So if you're a veteran out there and you have your DD 214, you need to call and see about getting qualified for your VA loan. Doesn't cost you anything. The loan can be refreshed every 90 days just by giving new documents. So it gives you a lot of flexibility. It also pays 100% of your down payment. So you too, just like with the USDA loan, you're left with having to cover closing costs only because your down payment is taken care of. Okay? And so that's an excellent loan, that VA loan. And also with the VA loan, you don't have any PMI, private mortgage insurance. So your payment is a little lower with the VA loan. That's one of the big advantages of the VA loan. Then the final type we have is the conventional loan. Now, the conventional loan does allow for higher purchase price amounts. That's one of the reasons why you need the conventional loan. It's also sold on the secondary market, bound together and sold on the secondary market. But it requires a higher credit score. Now, the good thing about the conventional loan is that as you pay down your mortgage, once you reach 80% of value compared to your mortgage amount, you can actually get your PMI, private mortgage insurance, removed from your loan, decreasing your payment amount. What a lot of people do is that once they get that PMI removed, some people call it PMI, MIP, MPI, but private mortgage insurance, okay? Once you get it removed, then some people take that dollar amount that they were paying for that and they dump it on their mortgage every month to pay it off earlier. So there you have the four type of mortgages: FHA, VA, conventional, and USDA. The VA and the USDA are 100% financing. The FHA is 3.5% down. Conventional with higher score is 3% down. Most of the time, conventional is about 5% down. All of them have their pros and their cons. Now, remember this, people. The loan is the cake. The down payment assistance is the icing. So let's say you're a vet, so you don't have any down payment. If you combine that with a Orange County, well, let's say you with Florida State Bond. Let's combine it with Florida State Bond in this case where we are right now today. then that would help to defray your 4% cost on your closing costs. Let's say you were doing a conventional. You put 5% down. You still got your closing costs. You get a Florida bond loan. You put that down to help pay that off. Or you get the Chenor and you use that to help pay that off. Or you get a 5% grant. You use that to help pay off your closing costs. So these programs are out there. Just remember now that the down payment assistance program is only the icing. You've got to have a cake to put it on. FHA, VA, conventional, or USDA. Hey, this is Harry Bing, your down payment assistance specialist with Bing Home Advisor Group of Your Home Sold Guarantee Realty. Hey, got any questions? Give us a call, 407-654-2626.